Hello and welcome to KPMG's 10 Minutes on Tax, where we take a look at some topical tax issues in 10 minutes. The 2020 personal tax filing deadline is fast approaching. So today we're looking at some key filing considerations, including some practical tips to help taxpayers in preparing and filing their 2020 return. My name is Claire Davey. I'm Head of PAYE and Personal Tax Compliance in KPMG Ireland. And today I'm delighted to be joined by my colleagues, Lauren Clabby, a tax director in our private client tax practice, and Sharon Warren, an associate director in our people services tax practice. And Lauren, not everyone needs to file a tax return. Can you explain who does and what category they need to fall into to be considered a self-assessed taxpayer?
It is always worth checking that you are actually obliged to file a tax return. Virtually all proprietary directors are obliged to file a tax return. There are people who own at least 15% of an Irish company. And outside of that, it usually depends on your level of non-PAYE income. If the tax on the non-PAYE income is coded or the income is less than €30,000 gross, you may not need to file a tax return.
And presumably then, Lauren, like most aspects of life in 2020, there are changes to the tax return this year, which taxpayers need to be mindful of.
That is definitely the case, Claire. There are considerations which we would have never contemplated 2 years ago. Obviously, the main thing which comes to mind is that many individuals will have claimed some form of COVID support during 2020, which may need to go on their tax return. Revenue have published a very useful manual on this, and it's available on their website. Then schemes to consider would be, for example, the stay and spend scheme. You can claim a tax refund of up to 20% of expenditure on accommodation, food or non-alcoholic drinks, where you spent at least €25 during the October 2020 to April 2021 period. And then there's remote working relief. You can claim tax relief on 10% of the cost of electricity and heat or 30% of the cost of broadband incurred during 2020. It's apportioned on a workdays basis, and obviously you can't claim tax relief on amounts made good by your employer. New office equipment purchase, though, does not qualify for tax relief. And then there's debt warehousing. This scheme has been extended through to the end of 2021 under the existing terms and conditions, but it is worth remembering that a credit for the PAYE paid by a proprietary director is not available if the company has warehoused that debt.
Thanks, Lauren. So I guess it's really important that care is exercised when completing tax returns this year so that reliefs are maximised, income is reported correctly, and you avoid revenue scrutiny. And Sharon, we saw a significant increase in cross-border remote working and, of course, displacement of employees in 2020. Have you come across any particular challenges in practice when preparing returns for expatriate employees?
Absolutely, Claire. Similar to all employees, COVID travel restrictions have had a big impact, but these restrictions have especially impacted the expat and globally mobile population. In many cases, the travel restrictions have resulted in unforeseen tax issues for both the expat and also for the employer.
Thanks, Sharon. And I expect this has and will continue to throw up many challenges for employers and employees. And did Revenue, Sharon, introduce any measures or reliefs to assist taxpayers in dealing with these challenges?
Yes, Revenue did introduce a number of measures to assist both the expat and the employer. However, these measures in the main related to extending timelines for applying for reliefs or for meeting tax filing obligation deadlines. Probably the most relevant measure introduced for expats in particular is Revenue's updated guidance on force majeure circumstances as a direct result of COVID-19. So the updated Revenue guidance provides additional exemption when considering the number of days an individual and their family members are considered present in Ireland in 2020 for tax residency purposes. The scope for qualifying for additional exemption under the updated guidance very much depends on the individual's fact pattern. So helpfully, Revenue have set out a detailed listing of situations and unprecedented circumstances which qualify, which are most definitely worth checking out prior to starting the income tax return process. And similar to many reliefs and exemptions, When claiming this concession in 2020, it's worth remembering the onus is on the individual taxpayer to prove the concession actually applies.
Thanks, Sharon. Very helpful indeed. Lauren, I think it's fair to say preparing a tax return is not getting any easier. Do you have any final tips or advice for taxpayers before they embark on preparing their 2020 return this year?
Do not leave it until the last minute. It's always very tempting, but can be a recipe for disaster. Firstly, if you miss the deadline, there can be a 5% or 10% penalty for late filing. And in the case of proprietary directors, that's calculated without taking into account PAYE paid by them. Sometimes mistakes will happen, and it is worth remembering that in the vast majority of cases, they can easily be fixed. The important thing is that they are fixed. Revenue allow a taxpayer to self-correct without penalty where certain conditions are met. In recent years, too, taxpayers are obliged to calculate or self-assess what their tax liability is, which can be complicated in particular when it comes to matters like USC or PRSI. Where a taxpayer is filing a paper tax return, Revenue will do this calculation for them if they file prior to the 30th of September 2021.
And Sharon, from a global mobility perspective, do you have any final tips or advice for both employers and perhaps employees?
Sure, Claire. I would reiterate Lauren's advice. Do not leave completing the tax return to the last minute. In addition, I would also advise all globally mobile employees to consider their Irish tax position for 2020, in particular where their personal or working arrangements have changed as a direct result of COVID, and to seek tax advice to be comfortable that they are fully compliant.
Good advice, Sharon. And finally, Sharon, just what are we seeing in practice in relation to refunds for expatriate cases? I understand this can be quite a protracted process with a lot of back and forth with the Revenue before that final assessment is issued.
Indeed, Claire, agreeing and obtaining tax refunds can be very time consuming and depending on the complexity can require varying amounts of engagement with Revenue. In general, tax equalised cases for expat taxpayers are complex due to the reworking of compensation data, which can result in different amounts being reported on the individual income tax return compared to their employer's returns. Revenue's expectation is that amounts reported on the individual tax returns should correspond to the employer tax returns, which obviously is a reasonable expectation. However, in practice, the amounts of income reported and corresponding taxes paid through payroll are generally not reflective of the individual's overall final tax position. And for this reason, there can be differences. So to make the engagement process with Revenue more efficient, it's important to ensure all information requested by Revenue is provided in a timely manner and part of one complete submission.
Okay, thanks Sharon and Lauren. That's been really helpful and informative. I think it's clear completing an annual tax return is not getting any easier, and COVID has added further complexity to the tax return process this year. So with this in mind, I think my three key takeaways from our discussion here today is number one, there are changes to the 2020 tax return, for example, as noted by Sharon and Lauren, force majeure, remote working release. So it is important that taxpayers familiarise themselves with these new sections to determine if they'll apply to them. Number two, in practice, and as noted by Sharon, there can be a lot of correspondence with Revenue before that final assessment issues. So it will be important for taxpayers to have adequate backup on file to support their claims and release in the event of Revenue follow-up queries. And number three, don't leave it too late to start the tax return process. If you're considering using a tax advisor to assist, it can take a bit of time to get set up as agent. So now is the perfect time to act. If you have any queries in relation to any of the matters discussed here today, please visit our kpmg.ie tax webpage for regular updates. And please feel free to contact me, the team here today, or your usual KPMG contact. Thank you for watching.